Hello guys, and welcome to part 7 of the Investing 101 series. The video quality is slightly lower for this intro, but that's because I'm using my phone for a screen share and I'm using an old webcam for my actual video. So just ignore that. It's only going to be for these videos where I do app reviews. But anyway, this is Investing 101. You can find the slide deck at this link, and I've got a shiny new URL shortener service. So mddl.link/investing101. You can find the YouTube playlist where this video is at mddl.link/investing101YT. So as I said, this is part 7 app review, and let's get started. So you're probably wondering, why Acorns? Well, the reason I suggest Acorns is because it's super simple and you might as well try it out even if you're going to be doing active investing. Acorns is just a joy to use, and you just put money in it and forget it, and it's there accruing money over time. So it's extremely simple. You set up your recurring deposits. So on a weekly basis, you put in a certain amount of money, and the portfolio is passively managed, meaning you don't actually choose the stocks, but you do get some control. You can choose your risk tolerance, which I'll talk about later. And depending on the risk tolerance that you choose, your portfolio will have an expectation of a certain amount of growth. And this is completely hands-off, and it's a good way to get consistent growth if that's what you're after. So these are the portfolios that Acorns offers. You can choose a portfolio that's conservative, moderate, moderately aggressive, and aggressive. Personally, I'm going with an aggressive portfolio. I would say, anywhere between moderate to aggressive is probably a good choice. Unless you're close to retirement, in which case this is probably not an investing series that's tailored towards you. This is more about young investors trying to get into the market. So there's another cool feature called roundups, and what roundups does is whenever you make a purchase on one of the cards that is tracked by the app, it will round up to the nearest dollar. So if you spent, let's say, $4.49 on a coffee, I don't know if that's what coffee costs at Starbucks or whatever else, but it sounds like a good estimate. You buy a coffee for $4.49, and Acorns takes the remainder, which is 51 cents if you round up to the nearest dollar, and it puts that in Acorns. And you can use multipliers if you want, and I'll show you later during the demo. In addition to roundups, you can add recurring deposits, and so you get to choose how many dollars you want to put in weekly, and you can choose a day that you want to actually add that amount. So if you wanted to add it right after you got your paycheck, which I think for most places they give out paychecks on Fridays, I could be wrong there, but anyway, you specify the amount and the day that you want to deposit it, and it does the rest. This is an easy way to dollar cost average. Dollar cost averaging is something that I discussed in the basic terms video, and it's the strategy that I recommend. Basically, you just put a certain amount of your money into the stock market on a regular basis, whether that's weekly or monthly, that's completely up to you. And if you put them into Acorns, then it's going to distribute it across your portfolio really easily. All you have to do is set it up and then forget it, and it'll accrue money over time. I'm going to do a demo of Acorns, but before that, let me talk about some of the pros and cons while we're here. Some of the pros: it's easy, it's simple to invest. There are reasonable portfolios. Like, they show you what stocks are part of those portfolios, like moderate, moderately aggressive, and they look pretty reasonable to me. If you're kind of a frivolous spender, and you're trying to break your cycle of consumerism, then roundups might be a nice way to do that. So let me just take a look at the pricing page for Acorns. So there's the light version and the personal version. Personally, I would just recommend that you start with the light version, because the light version has basically covered all of the uses that I need out of the app. You get a few more things with a personal subscription, but I don't really see it as too valuable. So like $1 a month out of your investment account, that's not a huge deal. I think that's well worth the ease of use that this app provides. Anyway, back to the slide deck. So some of the cons, besides I guess the fact that it does cost a little bit of money, even if that amount of money is $1 per month, you don't have any control over which stocks go into this. So if you wanted to invest in Tesla, then there's really no way to do that, because this picks the stocks for you, and it tends to pick ETFs from what I could find. One other thing that might be worth thinking about is that because this is fully managed by them, if they decide to rebalance things in any major way, then that means that they incur taxable events that you're responsible for. Tommy Bryson had a long rant video about this where he kind of goes into detail about what happened. But basically, after the market crash in March, they notified him that they're doing a rebalance, which I guess they were covering their liability that way. But he definitely wasn't happy that they rebalanced, because that ended up costing him a lot in taxes. But that's just something to keep in mind with the more active investing apps like Robinhood and Fidelity and One Finance and Webull. You have a lot more control over when you buy and sell, and specifically you can choose not to sell and to not incur taxable events, and you don't really have that option here. But it's still an app that I highly recommend, I think. So let's switch over to a live demo. So the Acorns app, you open the Acorns app and it tells you how much you're investing. It's got a bunch of different options. It kind of tells you how many dollars you've invested in the last 30 days. It shows when your next roundup will be deposited, and basically instead of doing individual transactions every time they round up, like you're not going to see like a 7-cent transaction and a 15-cent transaction and all that kind of stuff. Instead, once it gets to $5, it'll go ahead and invest all of the roundups that it's buffered until that point, and then it'll start counting towards the next $5. So it looks like I lied to you. I'm actually in the moderately aggressive portfolio, not the aggressive one. I think I can just change it right here. I'm not sure if this will incur taxable events, so I think I'm gonna hold off on that. Yeah, so I'm using the moderately aggressive portfolio, and you can see a breakdown of what these stocks are. And when it says large company stocks here at the top, you can see that this is specifically VOO, which is the ETF that I'm actually already holding in my other brokerages. And you get a nice breakdown of what these portfolios are. So let's look at conservative. Conservative is basically all bonds, which honestly is a horrible choice right now. So I would not recommend going with conservative. And then moderately conservative is a mix of stocks and bonds. Honestly, at this point in time, I would shy away from bonds completely and just focus on stocks. But yeah, I'm pretty happy with moderately aggressive. And let me go ahead and scroll down here and show the performance over time. And so in the last 3 months, I've gained about 8.6%. Over the past 6 months, I've gained almost 13%. Ever since I got the app, I've earned 14% on market gain. And you can see a breakdown of what your account value is. You can see that in percentages. You can see that in shares. So they give you quite a lot of information, even if everything's passively managed. Let's take a look at the roundup settings. So generally, you can choose the nature of your roundups. So round up to the nearest 25 cents, round up to the nearest 50. I just leave it on $1. You can actually add multipliers. So if I were to add like a 10x multiplier, basically what that means is every time I make a purchase, it's going to round up to the nearest dollar. So like our example from before, $4.99, it rounds up to the nearest dollar. That's 51 cents. What this means is every time I make a purchase and it rounds up, it takes that round up and multiplies by 10. If you want to make sure that you're not spending too much and just spending frivolously all the time, then this might be a good way to keep yourself from spending as much as you would like. Just make sure you don't overdraft if you do this. But for me personally, I don't use a multiplier. You can also set up your recurring amount. They have a minimum of $5 of recurring investment. So basically every Monday, $10 are taken from my checking account that I have this hooked up to, and they get added to this portfolio and distributed across all the stocks that I showed before. So this is a great way to kind of build stuff up over time. As you can see, since I set this up in June 2020, I've earned about $80 on top of the investment that I put in, which is this minus the amount that I've gained. All right, so that's the demo. And this was episode 7 in the series. Stay tuned for the next episode where I talk about Robinhood. And I'll cover some other apps similar to Robinhood, just in case you're on the anti-Robinhood bandwagon, as a lot of people are. Not that I agree with that bandwagon, but whatever. And finally, please join my Discord. Bye.